It was a rough one for gold prices this week. We got Gary Wagner on Chart This to tell us why coming up. It is Friday and we've got Gary Wagner. Gary, how are you?
So good to be here.
So Gary, just a really rough week for gold. We saw 7.5-month lows. That 1240 technical level was breached. Is there more downside in sight?
There certainly could be. What we have noticed, though, is that if you look at the fundamental factors that have been influencing the market, it seems as though this latest round of selling has been highly technically based selling.
All right, Gary, next week is a big economic data week coming out of the U.S. This week we've seen some really strong U.S. dollar numbers compared to the euro. Now, are you buying into the market's belief that the U.S. economy is resurging again?
Well, I think that the U.S. economy is poised as one of the stronger, if not strongest, economies globally. So there's absolutely no doubt that there's some intrinsic strength in the U.S. economy. At the same time, what I'm noticing is if you consider back a couple of years ago when we had a lot of activity in the European Union that was very, very bearish for their equities markets, it really took our markets down with them, and they tended to kind of not run in tandem, but there was more of an interrelationship. And now what we're getting is an inverse relationship. So as the European economy has weak points, really dollars are flowing into the U.S. economy and the U.S. dollar, which has just been on an absolute tear.
Now, Gary, as a gold investor, when you're looking at the yellow metal and its performance in the last couple weeks, I mean, are you looking at other metals now? Is there anything else that maybe catches your fancy when looking at precious metals?
Well, there is no doubt we have seen the precious metals under pressure in unison. And the only thing that I would suggest to look for signs of is the precious metals that are highly used in terms of an industrial component, such as platinum in the automotive industry. Automotive industry has been very, very strong, along with palladium. We've seen palladium really, really run at a couple of months ago as it ran to record highs. So if you're going to diversify, I would look to simply diversify across the board, buying a little bit of gold, a little bit of palladium, a little bit of platinum, possibly even silver as a diversification. But typically, when you have a strong economic environment, the precious metals that are components of that industrial environment will tend to do well.
All right, Gary, let's take a look at your inserts and what you've brought for us today.
Well, we're going to be looking at key levels of support. Are we going to see a repeat of what we saw last year, where we saw gold really go from some highs and from September through the end of the year in 2013 hit that double bottom at 1180? Are we going to repeat that, or is it possible that we'll find some support? So we really are losing levels of support one by one, and so the real question is, when will the selling end?
All right, let's have a look.
As a market analyst, we take the best available information, both fundamental as well as technical, and attempt to bring some clarity to what we see and thereby ascertain where we think a market might go based on that information. As that information changes, we have to be resilient and elastic enough in our interpretation of the markets to bring in new information and adjust our models accordingly. And over the last month or so, I've had to do just that. We correctly identified the fact that we were absolutely in a compression triangle in which what we were witnessing was a series of lower highs along with higher lows. And whenever we get a scenario like that, we find called to ascertain any kind of a true trend, because what we're getting is a compression of range rather than a dynamic breakout of range one way or the other. Now, as this market came down, my belief was that, and the model that I was working with, was that we would probably see it bounce off of here, and I was looking for a break back to the upside here. That changed dramatically, of course, as we began to break through critical levels of support. Now, in terms of those various levels, of course, the first real key indicator was when we broke through 61% retracement, but we were still within the confines of this compression triangle. And it really was the point in which it broke through this compression triangle and broke what I believe to be long-standing support that we realized that we were looking at a different type of a market, and a market that might in fact go to new lows. Market's currently trading at about 1232 and quickly approaching really the last real technical support level that we have before we would get to some sort of a triple bottom, this being 1180. And that was an area that, had you asked me a month ago, would the probability of that is fairly remote. When you ask me that same question now, I would say that the probability of us going and actually testing 1180 is not so remote anymore, and in fact is actually plausible within the models that we're working with. The key right now is that once we broke through the 61% retracement, and this retracement that we're looking at is of this long $200 rally that occurred at the end of last year, beginning of this year. Once we broke through there, meaning 1261, the 61% retracement of the shorter rally was 1280. But once we broke through the 61% retracement of this longer rally, we could in no way look at the market in any other avenue except to say that on a technical basis, we had a lot of selling going, a lot of selling pressure, and we're probably going to look for lower pricing. If you recall from the last two chart this episodes, this is when this occurrence was actually fully in force as we broke through these levels. And there was absolutely no doubt in my mind that we were looking at a very, very plausible bearish scenario occurring in gold prices. Now, since that point, we've had a dramatic drop over this last week in which we broke through the 1261. And as we broke through it, you can see that we no longer have had any up days whatsoever. Here, it looked as though, or appeared at least for a couple of days, it was trying to find some support, could not, broke through, and we've had a dramatic fall now testing this 1230 area. My sense is that if the market is able to break through 1230 and, more importantly, not find any kind of a support level, meaning it breaks through and there's no buying coming into the market, then my sense is that on a technical basis, the real next level of major support really doesn't come into this market until this double bottom at around 1180. Now, also, when we consider the fundamental factors currently at play, which is the European Union's economy in sort of disarray, the perception that the U.S. economy right now is robust, strong, recovering, and growing, we have had two primary factors come out of that. The first thing is when we look at the dollar index, this is back in July here, the dollar index has just been steamrolling to higher ground. Absolutely no doubt about that. At the same time, the equities markets, this being the Standard & Poor's, has been moving to higher grounds. On the Standard & Poor's, we've got this top at 2010. We had a very, very small retracement after reaching that top, coming down to about 1980, currently trading over the last couple of days back up, still below 2000, but nonetheless off of these lows, trading at 1989. My sense is that we are at a very critical point. And as I said, if we break through this one level at about 1230, we could see the market move as low as and test 1180, which is at this point a double bottom. And as such, I draw your attention to this weekly chart we've just pulled up, and I've got both upper and lower support and resistance lines, again showing this narrowing of range. We're using these two lows right here, the double bottom, the second of the double bottom, and of course, really what many consider the beginning of this tremendous bull run after the market hit 1,000 and retraced back to 700, so the rise from 7 to 1,900. When we look at that and then do the same thing for our resistance lines at the top. Again, we're getting that narrowing of range that has been so noteworthy in the market, and we are actually at a point in which we're just at or slightly below this particular support line. And that, to me, on a technical basis, lends credence to the fact that should this trend continue, we will probably come in and test the lows at around 1180 in gold.
Excellent, Gary. Thanks for your time today. Enjoy the weekend.
Thank you very much. My pleasure as always. And I want to wish all of our Chart This viewers a great weekend and prosperous investing next week. Bye-bye.
And thank you for watching this edition of Chart This. As always, any comments or questions can be sent to newsfeedback@kitco.com. Have a great weekend.